everybody. Welcome to Market Mavericks. I'm here joined by Mike McGlone and Scott Melker for our Thursday powwow on what is going on in the markets, from the stock market to crypto to commodities to even economic key things like PPI data today, which shockingly showed a jump in producer price inflation. So I'd like to start there, guys. Yesterday or 2 days ago, the CPI came out. The markets just ripped higher. It was, core was up a little bit, but not anything shocking. Yet all of a sudden we have PPI that was shockingly bad today in terms of inflation. Are these fake numbers or is this reality? Talk me through it, guys.
Well, go ahead, Scott.
I was just wondering who you fire.
Yeah.
Well, I'm glad you went there, because one thing I want to point out is we're at that stage now is, so you work at any of a government agency and you put any statistics. If the statistics you're putting out are counter to the Trump administration's liking, you have to be careful and be worried about getting fired. So you might be missing some stuff just in case. I mean, those of us who had been there and had a lot of dependents, you have to worry. But versus stuff that's favorable to Trump, it's okay. You might put it out, which means the music may be dying for the U.S., the rest of the world's trust in U.S. data.
So essentially, we're going to be the next China, in other words, with economic data.
Well, it's just where we are now as far as politicization. But I want to show you one thing about this PPI number on my screen, if I can, and that is this number, portfolio manager. This is just the main components. My colleague John Levin showed me this. Portfolio manager was up 5.8%. And what that is the stock market. And now we all know indirectly the wealth effect is massive. If the stock market were to drop 20%, we'd see negative CPI and PPI right away. At some point, I'm predicting that. This question's when, but that's part of the main component that pushes things up. There's a big pump up in stock asset prices, and it's driving inflation, and it's going to continue if we potentially ease in this environment.
So, Scott,
you know how you knew PPI was going to come in hot? I'll tell you how you knew PPI was going to come in hot, because predictive markets and FedWatch said that there was a 100% chance of a September rate cut. And you can counter trade 100% chance every single time.
Yeah. So let me ask you guys this question. So we're seeing obviously this shockingly poor PPI number. And then I just brought up the S&P 500, and it is down a whole 2.5 points on the day. Not even a 0.1%.
Crazy.
Why do you think people are so apt to ignore this potential surge in inflation?
Because they got opposite data a couple days ago, and nobody's really thinking deeply about it at this point. I just don't think anybody really cares. I think that they're still pricing in this rate cut for September, for better or for worse. But
that's what
I would now not be surprised if the Fed does not cut, which everybody is anticipating. And for how long, Mike, have we been talking about this on Macro Monday? 2.5 years. We've made a joke every time we see a definitive consensus decision on what the Fed's going to do be wrong.
So one thing that's happened compared to last year when they cut 100 basis points, the data was really turning bad. And my colleague Ira Jersey pointed out, now the data is turning good, except for something. Certainly stock market's doing well. Unemployment rate's stable. But the key thing that I think is going to matter is I think we are going to get that cut in September. The political pressure is so great now. I mean, there's a lot of things that are coming out. For instance, the housing market's certainly heading lower. Corrugated boxes is certainly heading lower. When I was trading bonds in the Treasury pits 30 years ago, we watched corrugated boxes. But to me, we're going to get the cut. The question is, what does it mean afterwards? There's so much jawboning, so much pressure from the Trump administration for this cut leads me to believe they see what I've been seeing for a while. There's a lot of risk in this economy, a lot of risk for normal backup and risk assets before we get to the midterm. And there's one thing I want to show you, and that's probably one of the best leading indicators there is, and that is what we saw happen in Bitcoin is the complete inverse of the VIX. So yesterday, when the VIX reached the low for the year, which is 14.5, Bitcoin reached its high. And when the VIX reached its high for the year, these are closing bases at 52 on April 8th, Bitcoin reaches low. At 4 p.m., it was $77,000. It's just that's where things are now. We're so ingrained in this massive speculative rally of risk assets. I have to tilt over to one key chart. I think it's looking the best I've seen in a long time. That's a 5-month bull flag on gold.
So I just want to pop this up here. So we were just talking about Fed cutting, and we do have right now, even with the data today, still almost a 93% chance of a Fed cut in September.
Yeah.
The only difference from yesterday is that yesterday there were 3 cuts into year end, one at every meeting. Now there's just two. So you basically have a cut in September, cut in October, and then no cut in December until January. So I think you're right on this, right? Scott was saying how people just, you got decent news 2 days ago, now not so good news. People are just saying, listen, they cancel each other out. Maybe it lowers one cut from the Fed into year end, but it doesn't really change a whole lot. Which to me, when I see a 0.9 month over month increase in PPI, and in my head, I say, okay, well, what would that be if it was every month? I mean, you're talking about inflation on the producer side up to
Yeah.
like 10%. I mean, it's massive. Now, granted, it won't be like that, but I mean, at some point, it does appear that we're seeing on the producer side tariffs starting to bite. Am I wrong on that?
Oh, absolutely. The key thing, I think it's got to bite, but remember the key thing about tariffs is earnings. And so they're eating it. I want to just show you one thing to point out things about PPI. Right now, this is the year-over-year measure. The goods measure was running up 3.6%. In China, it's minus 3.6%. But the key thing is about it is it got to in 2008, the Fed was easing. They started easing in 2007. It got to a high of around 10%. The Fed was easing, and of course they accelerated their easing. This was because of crude oil. So when we come to PPI, producer prices, the number one key factor macro usually is crude oil. Everything else now is related to services, but there is a decent amount of precedent to cut rates when inflation is somewhat high if other things are going down. But the key problem is it's so priced in, it's so expected, it's so assumed. Just look at value of cryptocurrencies, the value of the stock market is we so need those drugs to go higher that at some point there's going to be a bit of a detox. And yeah, that's why I think gold is figuring it out. And that's why I pointed that one thing here about gold is gold investors are figuring it out is gold ETF holdings are jumping. They're just leaping above this key resistance level. The big difference with gold ETF investors picking up a lot, I mean, this was after 4 years of outflows, looking massive outflows, this is overlaid with the 50-day average of the VIX. It's the key thing to watch. Last time, usually when you get gold ETF investors going up, it's because the VIX is going up. Now the VIX is still going down. So something's going to happen here. They're predicting, I think they're anticipating a bit of a volatile second, end of the year, which is normal. Question is, where does it end?
So, Scott, turning over to Bitcoin, we got to talk a little bit about Bitcoin here, the digital gold, if you will. Bitcoin made a new all-time high overnight and now has sold off pretty. I mean, this is a big sell-off on Bitcoin, right? I mean, now in the scheme of what it's gone up, it's nothing, but it's the biggest red candle in months on Bitcoin. First of all, is there a reason for the sell-off? Was it just that it made a new all-time high, so profit takers came in? I mean, what was the deal here?
Yeah, I think it swept the high and got smacked down by a whole lot of people who have billion-dollar, multi-billion-dollar positions in Bitcoin and think the all-time high is a pretty good place to sell. I don't think this is particularly surprising. It was getting a bit overbought in August. I mean, I think this was just testing the top of a range. I mean, I don't think it's the beginning of a bear market or anything, but I mean, you look at a chart. Would you be surprised if we just hung out for the summer between 123 and 112 or even drop below there and just in the kind of hundreds? That nothing would surprise me here. It's not great. I mean, everybody wants to see a blue sky breakout and, continuation to the upside on huge volume. And that is definitely not what we got here. So I think it's just a sign that Bitcoin's not ready to break out for now. But a lot of people were pointing to PPI, obviously inflation contributing, I think. But it was already down from 124 to about 120, between 120 and 121 before those numbers were released. So it had already seen a pretty clear rejection.
And the thesis for why would inflation going up be bad for Bitcoin? Wouldn't that be like, hey, I got to protect my dollar value?
Because
is
it
there
trades
something else?
because Mike will tell you how it trades like a risk asset in those moments,
Okay.
right? So I think, listen, the gut reaction to bad news, all markets do the same thing. We all know that all correlations go to one in a temporary reaction to any event. And so, and listen, the fact is Bitcoin is being traded by Wall Street guys, right? So there's going to be a lot more of that slight correlation in those market hours and when those decisions happen, with Wall Street.
It's in the mainstream now. We have it's the best days of Bitcoin are over. You just got to assume,
Well, you're gonna
expect
get
it.
some hate on
We,
that one, Mike.
I just point out facts, please. I mean, McGlone can be a genius and an idiot. Maybe I'm an idiot. And it's just pointing out facts. I've been pointing out since the futures were first launched in 2017. Those of us who used to trade futures, and it's when volatility started collapsing. Just the problem. That's the problem. Is it's human nature. You see what people, Michael Saylor, do. He's like, look at me. I did this, and I can. It's the pile-on that some of us remember in 1999, and
Mike, check this
2007,
out.
and 2000.
Sorry to interrupt you, but I literally had this up just for you because Saylor tweeted, the tempting the market gods. He tweeted yesterday that Strategy's Bitcoin holdings closed at an all-time high of 77.2 billion. I joked on my show this morning. This is like when you show your wife your portfolio. It's always the top.
That's and then the minute you show it to her, she wants to buy this, and this in the new house. I mean, that's the way it works.
And then you have to explain to her 3 days later why you can't buy any of it.
Well, that's why I'm still worried that on the year now, gold's up 27%, Bitcoin's 26%. That's rare for gold. It's what you'd expect with Bitcoin with the S&P 500 up 11%. It really should. So the key thing is now, how do we end the rest of this year? If we end where we are here or higher, it's just another normal market going up. It doesn't even show up in the history books. The key thing is if we just start backing up, let's say 5% in the stock market, even 10%, it might go down in history like 1999 and 2007. We're at those kind of levels. And then I look for indications for that. Gold beating everything. And then I just show you on my chart, the thing I've been worrying about for a while is this. The gold ratio, it's still, it's bumping up. It looks like it might break out above those 2021 highs. But the key other things is this is Bitcoin versus stock market near all-time highs. It's not where you want to overweight long, which Michael Saylor's doing. And this is just overall stock market. It's at all-time highs. It's not where you want to overweight long. Particularly here, I'll point out one key fact. On the year now, a 50% portfolio in gold and the other 50% in treasuries, which on an aggregate basis are up about 4 to 5%, gives you a total return this year so far almost 20%, 15 to 20%, but with half the volatility of most all risk assets. The fact that that's happening is really starting to scare me. So by the end of the year, risk assets have to really take off, gold maybe go lower, so that can delegitimize that trade. The risk is, by the end of the year, what if things start tilting lower? And it is August. It's not when you want to be going to overweight long the market and short volatility.
Yeah, and what you're saying is, and correct me if I'm wrong, but usually August through October is a very volatile period historically for markets, right?
Yeah, well, it's kind of, but it keeps being pushing sooner, but it's just such a widely expected thing now. I'm expecting a lot of what you saw in Bitcoin yesterday was shorts getting stopped out, and now they're just reverting, and maybe even the equity market. But we're waiting the catalyst. What's the next catalyst? So tomorrow we get retail sales. The thing is, retail sales have been strong. I mean, maybe that's some of that's front-running tariffs, but we'll see. But I just saw an article on the Bloomberg terminal how corrugated boxes the demand for those are collapsing, and just all these little things that somewhat add up. And it's just a question of at some point, when does the stock market give up? And so far it's not. And to me, the number one thing for anybody long all cryptos, no matter what they are, alts or Bitcoin, is the stock market has to go up.
Yeah. And one of the things that I've kind of been taking note of, I watched Kava report earnings a couple days ago, and obviously the stock dropped about 20% on earnings, and that was the hottest fast casual restaurant. And then I remember about a year and a half ago when McDonald's came out and said, hey, listen, people that make 50K or under can't even afford to eat at McDonald's anymore because we've had to raise prices. And so it almost seems like it's slowly, like this fire is slowly spreading up the ladder of income. And you still have people at the mid to upper tier where, they're invested in the stock market, their 401ks are at all-time highs. So I don't doubt that retail sales tomorrow will probably be pretty good, but there's no doubt that there is a bigger and bigger group that is struggling in the lower channels, right? And I do think that eventually gets up to the higher end. The question is, at what point, right?
Yeah, Scott, what do you think?
I don't know. Honestly, I'm so confounded by all of the data and trying to sort it all out. Like I said, I just kind of have gone into stupid mode and just assume that it's going to go up until proven otherwise. Everything.
All right, but that's been worked. That's the key thing. That's worked.
Turn off my brain. Ignore all the data. Ignore everything that I see because none of it makes sense. I default back to the markets can remain irrational longer than you can remain solvent.
True that, yeah. So Scott, speaking of which, talk about something going up. Talk to me about Ethereum Where is
I
it
mean, gold
headed? Will it
mine.
see
Yeah,
new
it didn't
all-time
quite
highs?
make it. Didn't quite make it to the all-time high. I think what's more relevant at the moment is the Ethereum Bitcoin chart,
Okay,
um,
I'll throw yours
and
up.
because that's barely even shown a dip here, even against Bitcoin on the retrace. And actually, until a couple hours ago, it was showing tremendous strength, sort of at a high versus Bitcoin. This is, I think, buoyed by the fact that there's been $3 billion in a week in inflows into the Ethereum ETFs, which is, I think, is 3 times more than the Bitcoin ETFs. Pretty astounding what this Tom Lee effect is doing for Ethereum right now. And I mean, this was as low just in March, I think. Yeah, April. As 0.017. It's more than doubled. This is up 130, 140% versus Bitcoin in the past few months. Of course, that's a mean reversion off the lows. So you zoom out and it's not the greatest chart in the world, obviously. But I think that the fact that it's finally breaking out here shows that there's some real interest on the altcoin side, certainly on Ethereum right now, and that maybe that's an indication that Bitcoin will kind of top here for a little while in range.
One of the questions I had is, like if you go back 6 months, 12 months, the narrative was, oh, Ethereum's over because Solana is going to eat its lunch and these other ones. Now all of a sudden, Ethereum's back. What's changed? Has anything changed?
Yeah, no. Fundamentals only matter on the way down.
Right.
The only thing that matters on the way up is price going up and cheerleading. So no, nothing has changed. And it wasn't as bad as they said. And now it's not as good as they said. And somewhere in the middle, you find a mean reversion. I mean, I think there's actually some legitimate stories this week that could be very meaningful for Ethereum. Tom Lee's been pounding the pavement, obviously, on the stablecoin narrative for Ethereum, which, by the way, I think is nonsense. There's stablecoins everywhere. They're going to be on all chains. It was just a really good narrative for Wall Street. But when you see Circle launching their own layer one, that has to make your spidey senses tingle for what that means for Ethereum, Solana, and all these others that depend on, stablecoin transactions as part of their value. Makes a lot of sense for Circle, sadly, to centralize and start to run USDC on their own chain. What if Tether does the same thing? So I think that there's definitely some narratives to watch here. But right now, this is just, demand from ETF buyers and Tom Lee, treasury company followers and such.
Amazing. Yeah. It's been an amazing move on Ethereum. The question, yeah, I guess we're all watching that I feel like that's why I didn't take out the all-time highs, because everyone was watching for that, right? And so it has to make
Right
people
there.
question it before it actually does do that. Mike, looking at the markets, right? S&P basically at all-time highs. What's your outlook for the next month or so, couple months? Do you see that correction coming, that elusive correction? Or do you think that people are just going to throw these inflation numbers out? Oh, the jobs revisions last month were fake anyways. Like what's the outlook here?
But I do enjoy that narrative because the BLS is just doing the best they can with the data as it comes in. The revisions were lower because that's when their data came in. These surveys just take a while and people don't always respond to them right away. But they have continued claims and employment claims are still running higher. They moderate a little bit. Employment data from ISMs are heading much lower, certainly from services. It's definitely happening. To me, the key thing is that's where I look at it as a trade. Like Scott said, it's completely priced in. We will continue to move higher, and the stock market will make records. Everything is going to go up. We're fine. Trump administration is MAGA, and we're good. That's where the trade comes in. That's why I sit back and say, okay, find things that are very low risk and low volatility. I think of an ex-trader, get out of the way and put a lot of cash on board, and so you can react to when it is. And the next big trade is when it goes down and stays down. Now, we're going to get a correction, maybe just 5%. Will it bounce and just go right back up in beta this year? We're overdue for it. That's the key thing. The big trade is when it goes down and stays down. It will happen. The question is when. And so I look at leading indicators. I look at indications of deflation. I'm seeing it clearly in commodities. Crude oil is broken down. Corn's broken down. And the key thing to watch is copper. Everything about copper is bullish. I put that in the Bloomberg chat today. I'm like, yeah, the charts are bullish. I get it. Of course, they're all bullish. But this is a chart on copper. It's a quarterly candle and made an all-time high, but for the wrong reasons. Trump tariffs. It's broken down, and the key thing about copper is it's for last almost 5 years or more than 10 years. It's always reverted lower, reverted lower. But I overlay copper on the same scale as corn, as the S&P 500 divided by 1,000, and the 10-year note yield. They're all clustered. And the risk, I think, is corn's market going down, natural gas is going down. That's why I look at it from a commodity standpoint. Gold's the only one going up. If copper goes down, it follows what the rest of the world's showing us with deflation, i.e., 1.74% yields in China. That is the whole thing tilting downward, and that leaves only one thing holding the whole world up. And from normal deflation from inflation, that's U.S. stock market. So I'm keeping a close eye on copper. I'm afraid this high this year is going to put in a pretty enduring high. It's going to do what it normally does. At 4.5, right now, $4.50, I think it's more likely to drop to 4 or lower than stay above 5. And that will be a good indicator to watch. So these are key things I'm anticipating and looking for.
So the inflation, you're talking deflation, and that's coming on the back of the PPI data. So you're thinking that this is short-lived because of the tariffs. Am I correct on that?
Oh, sure. It's a one, just one data set. Like I said, in China, it's running minus 3.6%. We did have negative PPI in 2021 as the crude oil market collapsed. Same thing we had in 2009. But now, like I pointed out, a lot of it is that stock market effect. And so what does that mean? Well, now we're at that level now. We've reached such a high plateau that we really shouldn't be easing. They're getting jawbone to ease. Can you keep making it go higher than 2 times GDP and the highest market cap versus the rest of the world? I'm like, yeah, we can push on that string for a little while, but at some point, the thing is, and the longer you delay it, the worse it's going to be. The reaction is going to be worse. And that's why I keep pointing out, well, cryptocurrencies are the top leading indicator. And here's maybe a top in Bitcoin. If the VIX is bottom, if the VIX just picks up, so far the average this year for VIX is 20. We haven't averaged above 20 since 2022. The last few years have been in the teens. So if it pops up to near its average for the year, that's a signal it's just all starting to roll over. You look for those indications. I remember looking for it way too early in 2006, and they all kicked in 2008. And, we'll see what happens this time.
Yeah, I'm seeing the VIX right now below 15. So on a historical basis, that's showing some complacency. Obviously, I think we all have seen it lower in certain periods, but it generally, considering it was at 60 back in April, that's a pretty dramatic decline in the VIX. And I think it underscores how much buy the dip mentality is ruling this market. And I think that's part of it too, right? Is that you have a market that even today on this bad news, number one, people just throw it out the window. But I think number two, investors are just very much at a point where they're like, nothing matters anymore. Just buy the market. That's the mentality.
Well, some of them are buying gold. I mean, and it's the biggest inflows in gold ETFs in 4 years. And now we've just breached a key level. We're at 92 million ounces. We haven't been above that level in 2 years. And the first time we ever did that was 2020. But volatility was heading higher. This time it's happening with volatility heading lower. So I think what's happening is prudent investors are diversifying their earnings and looking for their gains and looking for alternatives to help protect themselves when we get the normalization of very elevated risk assets.
All right. So let's talk about, we have about 5 minutes or so remaining. Economically, next week we have Jackson Hole. So obviously coming on the back of this PPI data, Trump continues to, I think even Bissett was telling Jerome Powell to lower interest rates by 150 basis points right away. But what do you guys expect from Powell? I think you guys are pretty hawkish in terms of, as of now, there's really no reason to cut rates.
I think he'll keep his consistent narrative, and then if he's going to show his cards, he would do it in September. I don't see any reason for him to rock the market with any controversial comments over the next couple weeks in August if we're waiting for 4 weeks from now for him to actually make a decision. You never know. He might sneeze in the wrong direction or something. But
well, sometimes he hints at Jackson Hole. I'm curious to see if he will hint. The problem is you have to, with the stock market setting records and cryptos on records, you have to anticipate a lot of that's already been priced in. And that's why I have to think, does gold get it? Does gold get, this is just kind of silly, the silly stage. But that's where it's going to be uncertain. That's where I think that volatility measure might be bottoming and might have bottomed already this year. But you're right, it's still running below 15, 14.7 at the moment. Yesterday's close was a low for the year. Maybe that's going to continue lower. But that's what I think you need for risk assets can go higher. You need that VIX to continue lower.
Does it concern you guys? We've been seeing these IPOs. Bullish came out yesterday. We saw Circle a while back, but almost every IPO is going up 100+%. Doesn't even matter what the company does anymore. Does that concern you from an irrational kind of perspective?
I can tell you that I was sent the bullish IPO in advance. I think it was priced in the low 30s, and you get it. You may get an allocation, you may not, sort of thing. And I passed because I was like, Bullish isn't even a big brand name exchange here. I don't really, as much as I like them, they own CoinDesk. I know Tom, like it's cool, but I didn't think there'd be much excitement for it, and it outperformed Circle.
Yeah.
It
Yeah,
came in,
so
I
it's
think they raised about the same amount, just over $1 billion, right around $1 billion. I think that shares were trading pre-IPO high 20s. It came out at about 30 and launched at 90, went over like 108, 110, and then back into the 90s. I haven't looked today, but that's almost exactly what Circle did. And Circle and stablecoins following the Genius Act should have a much bigger narrative and bullish tilt than another exchange going public.
Yeah,
I think part of what you're seeing there is very much the things you see near peak bubble. As Soros says, identify a bubble and join it. Questions, when does it burst? But it's also one thing that crypto people need to understand. This means a lot of that silliness of silly crypto coins that are worthless, I mean, that track nothing but trade at 30 billions of dollars, is shifting over to more of the equity market that has kind of things that like earnings. So
I do think that the public money that's interested in crypto is just looking for places to play right now, and there's a lot of it. And I think
it's working. Well, I mean, that's the thing.
Yeah, it's working
It's
until it doesn't.
Self-fulfilling prophecy, really.
Yeah, there was an interesting tweet earlier. I can't remember the exact metrics that were with it, but it was a researcher who basically showed what the effects of a 100 bip rate cut or 200 bips over time would be on a company like Circle and on their earnings, because that these companies are effectively like USDC, they're kind of just a bond, right? I mean, you're just interest rate exposure. So if interest rates drop, they're going to lose 30, 35, 40% of their revenue. And you have to assume that's coming, and they're priced to perfection for the current, or Circle specifically, priced to perfection for their current earnings. And they can't control their earnings if interest rates go down. They're building all these new things, obviously, because they know that. But simply being a holder of U.S. Treasuries as a public company comes with a lot of risk.
Interesting. Wow, I didn't even know that. I didn't put that together.
Yeah, I mean, listen, the bulk of their money, the reason Tether's made so much money is because we went from ZERP to 5% rates, and they're just collecting billions and billions of dollars and putting it in treasuries. That's
are they just? Do you know if are they doing short end bonds or long end?
They have to be extremely short duration because they have to.
So they're the most exposed to the Fed cutting.
Yeah, they have to be insta liquid if there's a mass liquidation or redemption event. So it's pretty crazy. I mean that you're just exposed to interest rates.
Amazing. All right. So all in all, markets, I think we can agree a little bit irrational, but we all agree that who knows when these type of things pop, right? I mean, ultimately, it could go on for months more, maybe even into next year. But when it does drop, I think we all agree that there will be blood in the water, essentially, because there always is, right? There always is.
There always is. So, you have, Gareth, any specific longs or shorts you're watching, or?
So I'll show you one chart, and again, this is one of my favorite longs out there right now. Let me bring it up here. I'm really keeping a close eye on KWEB, which is the China shares ETF. So this is like Alibaba and such, but I love this pattern. So you can see this trend line here was support over here. It rallied, had that massive move in 2021, came down, broke, and then look at how it's behaving here, banging on the underbelly. If this can break out, then I think you get a big move up in China names like Alibaba, which, by the way, trades at like an 8 or 9 forward PE compared to NVIDIA and all the rest of this group that's at 30, 40, 50 plus. And the thesis here, by the way, is that I don't know if you guys have noticed this, but Trump is he appears to be very much focused on keeping the economy strong and doesn't want to rock the apple cart, if you will, or the cart. And so my feeling is that he keeps on pushing these China tariffs out. I don't actually think they're ever going to be significant tariffs. I think he'll either get a deal done or he'll just kick the can down the road, especially once we're in next year and the midterms are on the horizon. He is not going to be levying anything that could hurt the economy. And so I think China stocks eventually become the new bull market here once all the rest of the craziness in U.S. stocks kind of peter out. Just my 2 cents on that.
Well, I appreciate that. One thing China's got going for it, just like Japan is, their government is buying their own stock market.
There you go.
You got to buy that on dips.
What better way to have the market go up?
Well, I was kind of concerned. I mean, just looking from a strategy standpoint, I thought the Trump administration would be more willing to take a correction in the stock market earlier this year and keep it that way, and keep it down for a while, and then let it get, do well by next, by the time by the time we really kicked in the midterms. But now I think the risk is the later we get it, closer to midterms, the bigger problem. But again, that only affects the top 10% of incomes, which own 80% of the stock market, and the rest of the constituents who don't vote, who vote for Trump, are more the lower 55% of wage earners.
Yeah, very, very true. All right, guys, let's end it there. Great discussion today. Thank you all for watching out there. Great group following today, and we'll hopefully be back next Thursday. But thank you, gentlemen. Make sure to follow them at the below handles there on X, and we will see you next week. Take care, guys.